So, welcome everybody to another episode of the All Time High podcast. I am your host, General Mort, and today we're going to be talking about the trials and tribulations of traditional finance, what those problems are, and kind of how blockchain can mitigate those concerns going forward in the future. But as always, we're going to start with a little bit of news. News is pretty light this week, but the big news really just being that Bitcoin and Ethereum both hit new all-time highs. Ethereum or Bitcoin blasting through 50K and now at I think 57 as of today, and officially breaking a $1 trillion market cap, which is pretty cool. That still makes it pretty small in the grand scheme of things. If you think about it, gold I think has a $10 trillion market cap, so still a lot of room for Bitcoin to grow if it's going to replace gold as digital gold. And Ethereum doing a great job and coming up behind it. MicroStrategy has also announced that it is preparing to purchase another 600, somewhere between 600 million and $1 billion in Bitcoin. So don't expect the institutional investments to slow down anytime soon. I think that there are going to be a lot more that are going to be happening over the course of next year. So keep an eye out for that. But that's really all the news I got for you guys today. Might as well just jump right into it and get into what we're going to be talking about today. So in order to kind of contextualize some of the problems with finance, I'm going to give you guys a little bit of a history of money. Then we're going to talk about the different types of exploitations in the traditional financial system, and then finish off with kind of how blockchain can help that stuff. So, for a brief history of money, one thing that I think is really important to realize is that the value of money is largely symbolic. So if you think about this, you say, no, well, the US government controls the dollar, so, that's why it has value. But realistically speaking, it only has value because we're willing to use it and transact with it. It's really the people and the goods that you trade and the markets that you create that give the value to the money. So the actual money itself, this isn't backed by anything. US dollar isn't backed by anything. Most fiat currencies aren't these days. So what we're really doing is we are instilling a belief in the currency or faith that has value, and that the next person that you transact with that money is also going to believe in its value. So this is an important concept to understand because, when you're talking about Bitcoin, people go, well, no, you can't touch it, you can't see it, you can't feel it. It's this magic internet money, and because it's not actualized in front of you, somehow it doesn't exist and shouldn't have value. That doesn't make any sense. The only difference between Bitcoin and the dollar is that there's a piece of paper that you can actually see a dollar on. But there's a lot of problems with that. So, just remember that the value of money really is largely symbolic, and that means that this is subject to change. We can change this, right? So, prior to any controlled medium of exchange, people primarily used to barter goods. And bartering was basically the trading and selling of different goods for other items. So, you might trade, whatever resource you have, if that was, I don't know, copper or wood or something, you could trade that for something else. And that's how people primarily exchange value, way back in the earlier days of humanity, I guess. But this is obviously slow and inefficient, and there's no fixed exchange rate, so people are more than likely going to get fleeced on certain things. You might sell a goat for not enough. Maybe your goat's worth more and you don't know it, but there's no balance there to compare it to. Sorry, not balance. No baseline, right? So the first currencies in history that eventually came out around 600 BC, I think Europe was the first country to, well, I don't know about country, but first place to actually mint their own currency, and these were obviously coin based, and they were minted using precious metals like gold or silver. So there was a finite resource. There were kind of some inherent value there in the scarcity, and that's primarily how people transacted with currency for a very long time. There was also, I think in 700 BC, the Chinese ultimately came out with their first edition of fiat currency, and that kind of significantly changed the speed and efficiency of business transactions. So even though fiat currencies origins go back that far, it really wasn't until much later that it became widely adopted, right? So, and that was a lot more recently. The first paper money issued by a central government was by the European government in colonial America, and ultimately the U.S. ended up creating its own form of currency. Obviously, once we moved away from Europe and all that good stuff, and that eventually became the U.S. dollar that we know today. Fiat currencies were also, like coins, originally backed by those precious metals like silver and gold and those different assets, so that there was some sort of tangible, real world value to it. But ultimately, the US moved away from the standard in 1963, and since then, the dollar has been basically purely, faith based, right? We are just trusting that the US government is giving us a dollar that is worth something, right? And they control the supply, they control interest rates, they control how the inflation works, they control pretty much everything, but we are trusting them to do it correctly, right? So there hasn't been really a big evolution of money in quite some time. I would say since the transition to the fiat standard, money has largely kind of stayed the same until now, right? So I think digital currencies are the next evolution of money. And I don't necessarily mean that Bitcoin is the next evolution of money, or that even Ethereum is the next evolution of money. What I'm saying is that digital currency is the next evolution of money. And this means a variety of things. This could mean that this is USD coin, or some other sort of stable coin. This doesn't necessarily mean that we have to replace the US dollar with something like Bitcoin. What I'm generally saying is that currency is going to be digitized because it just makes sense, right? And for 5 primary reasons. It is decentralized, it is immutable, it is transparent, it is permissionless, and it's trustless. And I'm going to explain a little bit more about that at the end, but it's important for you guys to kind of understand that. So I'm going to say that one more time. Decentralized, immutable, transparent, permissionless, and trustless, right? So these are a lot of new big benefits to it that are going to influence the future of money and kind of how that evolves. Welcome. Glad you're hyped for episode 3. All right, so first, let's talk a little bit about some of the problems with fiat currency, and particularly the US dollar, and some of the issues that we run into over the last several years. Number one being counterfeiting. Obviously, we have come a long way in combating counterfeiting, but that hasn't really completely eliminated the issue. The Treasury estimates that anywhere between 70 million and 200 million US dollars in circulation are counterfeit. It doesn't sound like a massive number, but this is significant. I mean, this means that there is millions of dollars out there that are just not real. That somebody found a way to counterfeit the US dollar and stick them into the ecosystem. This is not possible with digital currency. Digital currency is immutable. And it cannot be duplicated. This is very important. This means that you can't fake anything. You can't say, well, that person has money when they don't. You can't try and print extra money. This money is unable to be changed forever and ever in time, right? That's a very powerful idea, and it's something that we're not really familiar with. And it sounds kind of crazy. It sounds like, oh, well, no, there's a way to hack it. Like, come on. Everything I read says there's not. So this is important. But even still, let's talk about the banks. Banks have processed trillions of dollars in illegal transactions. And you might say, how is that possible? The banks are supposed to know what they're doing. The banks, we trust the banks. The banks have our money. Well, it doesn't mean that they know everything that's going on. They don't also know exactly where all that money's coming from. So Inadvertently, the banks end up processing trillions in illegal transactions, sometimes without even realizing it, and they're facilitating things like drug trade, terrorism, and trafficking, which obviously are things that none of us like. But currently, the financial system lends itself to be abused in this way, where there are loopholes and ways to, clean money and get money that is perhaps obtained illegally and turn it into money that looks like it's legal, right? So the banks are facilitating this. I'm not saying that they're out there fucking championing it and saying, yeah, bank, come and do illegal stuff. No, but the problem is that it's hard to tell sometimes, and there is some serious limitations with the banking system and how they track money, right? Um, and I'm going to be honest, of course, there's illegal activity in crypto, but I think it's a lot less than what people think. There's been a really big narrative that says, oh, well, crypto's this anonymous stuff, and people can do all sorts of shady shit. But the reality is, only, at least in 2020, 0.34 of all transactions in cryptocurrency were illegal. That is a pretty small percentage. What do you say to the people who argue we are already in the digital space with more and more people using less cash, credit cards, debit cards, etc.? We are, and that's not true. Or sorry, that's not untrue. But here's the point: there are still problems with credit cards and debit cards. First of all, second of all, our current digital financial system is inefficient. It still is really subject to hacks. It's subject to issues that like the double spend or chargebacks, things like that. It's still pretty slow, even though we do use credit cards and debit cards. We still have to wait for money to clear. There are still a lot of limitations in that current system, despite the fact that we're already pretty digital with our money. Problem is that lack of security is still there, and the lack of transparency is still there. We don't exactly know where the money from those credit cards, where it's going. You can get screwed and your credit card information can get stolen. Same thing with your debit card information. There are still just significant hurdles to the current financial system in terms of banking and tracking money that don't really allow for us to be fully secure and fully free in a lot of ways. So we are trusting the banks to mitigate these concerns. We're trusting them to make technology and to be smart about their tracking so that we don't get screwed by this stuff, and that, overall the economy doesn't get screwed by this stuff. So we're really, again, talking about this concept of faith. We are putting faith in the banks, right? To be good with our money, if that makes sense. But they're not doing the best job right now, right? So aside from simple counterfeiting, we also talk about money laundering. And I mentioned this a little bit, and it's similar to the stuff above, but people acquire money, the US dollar, a lot of ways that are illegal, right? And this is the acquisition of storage of funds that are not legally obtained. So whatever method you want to think about, whether it's drug trade or you've got a front store, you're basically taking money that you shouldn't have, cleaning it through the traditional financial system, so through the banking system, finding ways to basically mask that it's been obtained illegally, and then you are, now you got a lot of money, right? So this is a big problem. It's, the US dollar is difficult to track and nail exactly where those sources are coming from, so this is a lot of problems. So blockchain is transparent, right? So if we needed to find out where transactions were going and coming from, we just look at the public ledger. And, existing financial systems are going to be free to use this, to make their own technology around it, to query the ledger, to check it, to find for strange activity, and better find out where it's coming from, right? Every transaction on the network that occurs goes into this ledger. So we're always going to be able to see what's going on, right? So that's a really important aspect, because right now our money system, especially with regards to cash, is really hard to track. If you're doing a lot of business in cash, you could also just say that you didn't pay or you didn't earn a certain amount of money, and you don't have to pay tax on that, right? Obviously, that would be tax evasion, and that's illegal, but that happens right now. Exactly. The main issue is trust, and we have to find something that we're willing to trust enough to basically be 100% efficient. So, the last one of the last points I want to talk about. Actually, there's two more, and we talk about fraud. And I'm sure that some of you have been victims of fraud. I have. I had my social security number stolen a couple years ago and caused me to freak out and had to do a whole bunch of stuff to protect myself so that somebody couldn't use that to basically fuck my credit over and, kind of ruin my life financially, right? So in 2016, there was a staggering 15.4 million victims of fraud. So over 15 million people in 2016 alone had their identity stolen, and more than likely had somebody either open a credit card on it or steal their credit card information, etc. And this is extremely scary. If you've ever been in this situation, it does not feel good to know that somebody else can potentially hurt you financially and has variable access to maybe not your funds directly, but the ability to, they have access to your profile, to your identity, to get a credit card and run that up. I know people who have had credit cards open in their name and had the bill run up substantially. So this is a very real concern, and this happens fairly commonly in today's life, right? But like I said, blockchain has real-time monitoring. So, in other words, even if this were to happen, which is almost impossible right now, you would be able to see that those transactions are happening on the network. They would be able very quickly to find out that there is fraudulent activity going on. But even still, in order to do that, they would have to gain access to your personal wallet, which means that you would have to literally give away your keys or store them really, really poorly so that somebody can steal them. It's pretty hard to do. And you can also do a lot of creative things in blockchain where you can kind of diversify your funds and keep them in different addresses so that you're a little bit more secure. So if one address somehow gets compromised, then you can get them back. But the key thing is that address, this private key that you have, there is no way to brute force hack this. So in other words, unless if I personally store this poorly, or I happen to give it away to somebody because I don't understand, that's the only way they're going to get access to my funds on the blockchain. There's absolutely no way that they can hack for my password and get inside. That's just simply not how it works. So our identities, in other words, are protected by these private keys, and these private keys grant us access to our funds. And there's no third-party approval for verification, so there's pros and cons there. We have to be very careful about our ownership and be very deliberate about how we store our stuff, right? The other thing that this gives us is the inability to double spend, which I mentioned earlier. So this was actually one of the critical innovations of the Bitcoin network, is the inability to double spend, it sounds like what it sounds like, to spend money twice, or to spend money, charge it back, and then you kind of have a glitch in the matrix, right? And this happens today. People buy things and then they charge the money back. People donate to people and then they charge the money back. This really sucks. I see this happen to streamers and different content creators sometimes, and that's just a bad time. Sometimes they send them a really large sum of money, they get really excited, and then it gets charged back. It's really unfortunate. It's just one of those things that is how our system is designed that is not ideal. So I think the really important points to understand here is that, like I mentioned earlier, there's this narrative that Bitcoin and other cryptocurrencies are widely used to facilitate illegal activity, and that we should be very wary and not trust these systems. But the reality is that they're designed so that you can trust them inherently. they're designed to limit these kinds of things, to limit fraud, to limit money laundering and counterfeiting. It's just because nobody, there's no like central authority sitting there backing it that you can trust and say, okay, well, I'm going to trust that guy. The whole system is designed to be trustless. So because of the nature of how the network operates, how transactions are processed, it doesn't require a central authority to trust, because the network corrects itself. It checks itself against each other so that they can constantly continue making the right decisions. And like I said, there is some illegal activity on these networks, but it's pretty minor, and honestly pales in comparison to the illegal activities that are engaged with the US dollar. There is a lot of fraud and a lot of illegal activity that happens with the US dollar, and we would be simply lying to pretend like those things didn't exist and to be all worried about Bitcoin and stuff. The reality is I think it's just fucking deflection. It's they're trying to mask their own asses, cover their own asses. I don't know. Don't pay attention to that narrative. I think it's a really poor narrative, and it's really the big reason I'm doing this episode, right? So there are some other problems still, like taxes. And, we all pay taxes, or at least we should. And this system actually gets abused in a lot of ways. They change the tax code all the time. My parents are both accountants, so I hear about it all the time. They change the tax code, and then they create some other loophole, and then some loopholes get closed. And it's just this never-ending evolving system that's really complicated, that it takes a professional to understand and study and keep up with it, year after year. To make sense of it and be able to actually work within it. And I don't know if that's a good thing or a bad thing. To me, it's kind of a bad thing, because I think the layman should be able to understand where their taxes go, why they're paying those taxes, and what that money's going to. How do you prepare for the transition to cryptos? I feel like we are all picking and choosing at this point. No one really knows who the winner will be, but I'm leaning towards Ethereum. So that's a really good question. I think you need to do two things. First, decouple your thoughts of any of these currencies being digital cash. It's possible. But I think if you think in that context, it limits the whole scope. So I would try and not think of Bitcoin as a currency and think of it as digital gold, a store of value. Think of Ethereum not as a currency, but digital oil. It's the resource that powers the Ethereum engine, that makes that whole thing run so people can build applications on top of it. The only currencies that I regard as true currencies in the space right now are stable coins, because they're tied to the US dollar. Those are the only coins I see, at least in the near future, being actual transactional coins, things that you can, buy stuff with. Because otherwise it doesn't really make a lot of sense. An appreciating asset is not really something you want to spend money to purchase things, right? So in order to prepare, otherwise, I think invest in the technology. That's what you're investing in now. And then the other half of that is that the US may ultimately move their financial systems on top of blockchain. And it may not be open source. It may not be decentralized right away or at all, knowing the US government. But that is how I would see that evolution taking place in the short term versus the people rallying and choosing a particular currency for them to be their transactional currency. Oh, you got hit with an ad. I'm sorry. Yeah, to sum up real quick, think of Bitcoin and Ethereum not as currencies, but, Bitcoin as a store of value and Ethereum as digital gold that powers the Ethereum engine, right? Try and think of stablecoins more as currencies, and that's kind of where I see things leading towards versus the current set of currencies kind of taking over, if that makes sense. I would answer your question in depth again, but I just don't want to, not great for the pod. So in the tax system, like I said, we've got the system that's just abused in a variety of ways. And in some aspects, this system has been used to kind of safeguard the funds of the very wealthy, right? There are loopholes in these systems that allow for bad actors to basically limit their tax liability and retain their wealth. That's not, poor individuals or middle-class individuals don't have as much of those options because they don't have as much money to play with, right? So the concept there is that you kind of diversify your assets to benefit from different tax incentives. So if you have, this is your money, you're going to put your money into like these different categories, and you might get things like tax credits, or deductions. And sometimes, there's a lot of other things. I can't speak too much to all this stuff, but point is, you're gonna kind of diversify all your assets until at the end of it, you're gonna have lower taxable income, right? So this might actually change, what bracket you're in and determine that you pay lower taxes, or you might stay in the same bracket, but your taxable income might appear lower, so you're gonna pay less in taxes, right? Um, this happens a lot, and and there are legal ways to do this. In fact, they're all legal. This is part of what my parents do is they figure out how to allocate your money into certain buckets so that you pay the lowest possible amount, right? It's not inherently a bad thing, but the problem is that this is a system that more so benefits the wealthy because they can afford to invest more money into different things in order to limit their tax liability, right? What I think is cool is that this system could kind of be changed with cryptocurrency, right? So let's say you have your taxable income, and this taxable income is, tied to an address, and this address is constantly reporting to the public ledger. Now, the IRS could theoretically build a smart contract that constantly reads this ledger and then just literally automatically pays taxes. And automatically potentially allocates your funds and puts them into the proper buckets and everything. Because this is publicly viewable and you can kind of see all the transactions that are taking place, this whole process becomes way more automated. I don't necessarily want to put my parents out of a job, but this definitely seems like a possibility. And it would be much more efficient and much more transparent. And it would be significantly harder to do this and put your money maybe where it doesn't belong than to do this and just have everything kind of happen automatically, right? So a lot of people, what they do is, obviously there's tax fraud as well. They might underreport their income. They might underpay their taxes, or they might just not file and completely avoid paying taxes altogether. Some people who are really heavily involved with cash do that because cash is hard to trace and they can't necessarily prove that income exists, right? So if we assume that the US dollar is tokenized, this process becomes pretty likely, and very possible. Like I said, basically the IRS can query the ledger and automatically determine how much are owed in taxes and could automatically also collect that tax. It's a pretty cool system that I think is definitely possible in the future. I don't know about the near future, but that is definitely kind of how I see things going, right? So some other ways that the dollar and the economy has been manipulated. Obviously, like what you saw with the GME stuff, stock market manipulation. Some people have the power to manipulate stock prices, and not even just individuals, but largely hedge funds. These whales can move the price of the stock and transact in large volumes to push the price down or up. One other problem right now with the way that the current stock market works is that the spreading of rumors can really hurt price, right? So the media has a lot of power when it comes to the stock market. And, like what happened with GME, it was like, for whatever reason, all the media people started talking about silver. They were like, oh, the Wall Street Bets guys, they're buying silver. Look at silver go. Nobody was buying silver. If you go look on Wall Street Bets, they were not talking about silver. They were talking about GME and maybe AMC and Nokia. And that's pretty much it. Maybe BlackBerry. The other thing is sometimes hedge funds, they short these companies into the ground. They buy so many of these short stocks, they sell them off instantly, price tanks, and then those companies are left fucked and they can't recover. They tried to do it to Tesla. They tried to kill Tesla, but retail investors keeping Tesla alive, in my opinion. So decentralized hedge funds are a possibility. And this would kind of give people some fighting power. You know, this isn't a small group, a small private entity that owns a fuckload of money. This is potentially hundreds of thousands or millions of people that all invest in a particular fund together. And they make decisions on how to move their money in the fund and what to buy and when to buy and what to sell. You know what I mean? So this is a very, very, very awesome evolution, in my opinion, because previously speaking, it's really hard for small groups of people to fight back. GME was kind of our first victory, and I think that there are going to be many more victories when this starts to become more of a reality, right? So let's talk some more about banking, right? I mentioned banking earlier, but like I said, we count on the banks to keep our money safe. That is basically what everybody just thinks the whole transaction is. I give you money, you're going to keep it safe, and if I need to get my money, it'll be there, right? But what we're kind of doing is we're really transferring ownership of our money. Of money. So when we put money into the bank, what we're really saying is, okay, bank, I'm going to count on you to keep my money, but they're going to be able to do whatever you want with it, or whatever they want with it, right? The bank uses our money to make money. That's how the bank stays profitable. Uses our money to make money. How does this happen? It happens in a couple different ways. I think the biggest ones are loans. They're going to give your money away and basically hope that it gets paid back and hope that it's still there when you come to collect, right? They can also purchase stocks with your money. So other assets that are going to appreciate over time and maybe depreciate over time. And they also buy and trade these loans, actually, which I find kind of fascinating. So what happened in 2008 is basically these banks were just buying and selling these loans at these crazy interest rates, and eventually it all came crashing down. And it turned out that there wasn't enough money to actually cover all of those outstanding loans, right? Which caused the market to just basically collapse. And instead of letting all the banks fail, the government bailed them all out, gave them a bunch of money, right? So this is scary to me because this represents basically a theoretical future where I've got, let's say it's $50,000 in the bank, and I want my $50,000, and I go to get my $50,000. Bank says, "Well, we don't have it." Now what? Now my trust that I placed in this traditional institution that has existed for hundreds of years, they don't have my money. So my money's just gone. It's unlikely, but it's scary to think about. And I mean, it kind of already did. I mean, in 2008, that's basically what happened. And the banks just continue to do their thing. Like, there was no real repercussions there. They didn't have to change anything. This is bad, in my opinion. And we don't even really get anything cool for letting them use our money. The bank takes our money. They do all this cool shit. They make all this fucking money. And what do we get? We got 0.5%. Stonks, yeah. They get their fucking stonks, and we get 0.5%. So at this rate, you're actually losing money by just holding it in the bank. I'll explain a little bit more. So let's talk about the value of a dollar. So the value of the US dollar is obviously subject to inflation. Anybody who is, a person in the US has been able to visually see this over the last 20, 30, whatever years, right? So the inflation rate of the US dollar currently is about 2% a year. That means that every year, your dollars are worth 2% less. And we're only getting 0.5% from the bank. So you are really losing 1.5% of your money every year by just holding it in the bank. It's awful. Imagine, just really think about that. Think about that instead of terms of like, imagine just 1.5% of your money just disappeared every year. Like, how would you feel about that? Only benefit, I think, is our money is insured. Exactly. That's the faith. That's the trust that we're placing in the system. But exactly, having the keys to your own coin is a little bit more valuable because at least you know it's there. At least that's actually tangible. Sorry. Exactly. If the bank goes under, money bye bye. No, you have no more money anymore. I don't feel like people really know that. I feel like people think that like your money's always going to be there in the bank, but the bank could theoretically fail, and then you don't have money. That's horrifying to me. So inflation is causing the US dollar to rise by about 2% a year, like I said. And that means that your dollars in 2010 are now worth 20% less than they were in 2010. Now, let me be clear. Inflationary currency does not inherently damage the economy. This could actually be good. Some inflation can be good. Because, regular inflation basically means that people can continue to price things higher, like homes and whatnot. But the problem is the Federal Reserve has been printing money like fucking hell. Money printer go burr, and eventually US dollar go down, right? So this is not sustainable, in my opinion. Your purchasing power over the years has dwindled massively. So to illustrate that, $100 in the year 1913 is now worth a paltry $3.87. That's insane. Funny thing is, you can put money in their stock and get paid dividends, but the bank doesn't sell you that. Yeah, they put it in your savings account. Chase stock, 2.4 dividend yield. What do you mean? You like 2.4%? Or you mean if you buy the Chase stock, they give you 2.4% in dividends? That's what I'm hearing. Okay. Yeah, even that kind of sucks, right? So, purchasing power gone down significantly, but I think the real problem here is that this is contributing to wealth inequality, and I'll show you how right now. So, if the value of the dollar is 20% less than it was in 2010, it means it's probably about 40% less than it was in 2000, and wages have not rise commensurate with that decline, right? So because wages aren't rising that fast, who's getting left out? So you could go and you could take a look at the average wages, like average hourly wage over that time period, and you might see like a fairly relative climb. It might have been, come up about at that rate that you would expect, but the average wage doesn't tell us that much, because if the people at the top who represent, maybe the top 10% of wage earners are earning a bunch of money, it's going to bring that average up, even though there might be 75% of the population that doesn't benefit from that, right? So to illustrate that, this is interesting to me. So we take a look at median wages. So in other words, what's the most common wage in the middle of all those earners, right? So since 2000, the bottom quarter of all wage earners, so this is 25% of all wage earners, their wages have risen 4.3%. 4.3% for all these people in the bottom half of wage earners. In the top half, in the top 10th, their wages have risen 15.7%. This is a monumental difference. Just staggering to me, honestly. And this is really what's driving wealth inequality in America, is that our inflation keeps going up, but the people who need to be making more money and for their wages to be increasing aren't. So, the fight for that minimum wage makes a little bit more sense in this context. Wage increase is a scam. If they have to offer it in order to keep up with inflation, the system is broken. Exactly. This is a scary reality that we currently live in. So you can have a theoretical future where we might end up like Venezuela or Zimbabwe. I don't know if that's going to happen, but in Venezuela and Zimbabwe, they were subject to such insane hyperinflation that it completely destabilized their economy and completely devalued their currency. So these countries have turned to Bitcoin. And they actually rely on Bitcoin to do more daily transactions to buy things like groceries and whatnot than they do on their own currency because it's worthless. I don't know if this will happen in the US, but it is a dangerous reality regardless because of this growing wealth inequality problem, right? So what are the benefits of a decentralized trustless system? And there are several, but to highlight many of them, we have no central custodians, no intermediaries. So our money interactions change significantly on a decentralized digital currency system. Instead of me putting money in Venmo and sending money to my friend, or PayPal, or whatever, or doing a bank transfer, my money will go from point A to point B directly to who I'm trying to send it to. So if Bob wants to interact with a smart contract, that can act as the intermediary. So Bob wants to send money to Alice. He's going to put money from his wallet into the smart contract. Smart contract's going to handle all this stuff, and it'll send the money to Alice. Entire process is automated, and it's secure, barring any human error with the coding of the actual contract, right? So you are fully secured by the entire power of the blockchain that you're running on. So if it's on Ethereum, you've got billions and billions and billions of dollars of computing power cryptographically securing that transaction. Feels pretty good. It's hard to put your trust in an automated system, but the reality is that I think that long term, it's just going to be way safer and way more efficient. Talk about limitations of fraud. We can prove ownership, and there's data, like we could create actual real identity verification via blockchain technology. And you could tokenize all of your record keeping. That means land titles, receipts, articles of incorporation. You could tokenize all of those assets, and nobody would ever to be able to dispute ownership. Fraud would be infinitely more difficult, right? So, and then we talked about like taxation on the blockchain. It removes the need for manual reporting and removes the human error and hopefully fixes a lot of those loopholes and exploits that currently exist. And then lastly, we just talk about monetary ownership. You become the true custodian of your funds on the blockchain. Nobody can restrict access to your funds or profit from your money. Your money only exists to benefit you in this system, and I think that's really awesome. And you can put it to work in other ways to benefit you more, like doing stuff like staking or high yield, savings accounts, with regards to different markets and different coins. It's really a fascinating change and something that I think is going to be a lot more important. That's part of why I want to educate people about this, is because I don't think people realize they are getting fucked. We don't live in a system that exists to benefit us in a lot of ways. It's kind of been designed so that we don't benefit from it, and only the people that understand it and only the people that have the most money benefit from it. And I think that we need to make that change. So we need to be educated about this stuff. We need to understand it so that we can go forward and become true owners of our money and actually have true financial freedom, right? So to sum up, blockchain helps primarily, helps in a lot of ways, but to me, the 5 most important things: it is decentralized. This means nobody owns it. Nobody owns the network. It's entirely operated by the people who help run it and the token holders. It is immutable. This means that data cannot be changed. Once you make a transaction, it is there forever in time, and you can never change the details of that transaction. That also means that data that is stored on the blockchain cannot be changed. It is immutable forever and secured by the network. It is transparent. This means that all transactions are publicly viewable on the blockchain ledger. If you go and you look at Bitcoin, you can go look at a Bitcoin Explorer or Ethereum Explorer, and you can see every single transaction that takes place. You may not be able to see exactly who's making those transactions, but you can see where all the money's going, how it's moving, right? It is permissionless. Nobody can come to me and say, you don't have good enough credit. We can't do that for you. Nobody can say, you're a high-risk person. We can't let you open a bank account. You don't need permission to operate on this financial network, because as long as, if you're a bad actor in the system will kick you out, or it'll take your money. One of the two. And you have to be pretty creative to try and do that kind of stuff, right? And lastly, it's trustless. This faith that we hold in the banks and the traditional financial institutions doesn't need to really exist anymore, because we are cryptographically secured by the network. The only thing that we really have to trust is human error. We have to trust that the people that are coding these things are doing it the right way, so that we're not going to lose our money, right? And that is a lot of trust to put into a system that is very unfamiliar. So I do recognize that hurdle, but this is important. It's also trustless because we don't need to trust that the network is making the right decision, because it self-corrects. It is constantly checking against itself, right? I need to be educated with the staking portion of blockchain. I feel like make myself more vulnerable to being scammed. It is the Wild West out there. I'm not going to lie. Right now, I've said this before, we're still like early days of the internet. There's still a lot of this stuff that's going to feel sketchy, might look sketchy. The biggest recommendation, do your research. And that's partially why I'm here. It's to help you not have to do all the research, but just make sure whatever you're getting involved in is legit. There are scams out there. There are people finding ways to trick people, and you just have to be careful and not fall for it. I've been scammed, unfortunately, and it doesn't feel good. So, protect yourself. Read up about how to stay secure. Read up about whatever platform or smart contract you want to interact with, and make sure that it's safe, or that it's been, audited significantly, so that, security can be ensured, right? So these are the 5 primary important factors to take away from this. Is how does blockchain help the financial system? Well, it's decentralized, it's immutable, it's transparent, permissionless, and trustless. And these 5 components can really, I think, change the way that finance works in the future. So that is pretty much all I got for you guys today, in terms of what we're talking about with traditional finance and blockchain. I had a great time putting this presentation together. There's still some things that I'm trying to learn about, so if I didn't cover everything, feel free to ask me questions. My DMs are open and whatnot, and I'll be happy to figure out whatever question that you had. Of course, please like, subscribe, follow, and all that shit. It does help me. I do want to spread the word about what I'm doing, and I want as many people to be able to learn and navigate this crazy ass ecosystem, so that we can all hopefully make more money and be more free long term, right? Let's free the actual market. If you need any info on any of my channels, in the info panel below, I have links to everything, like my Twitter, my Instagram, and my YouTube. So if you want to follow me on Twitter, that's where I kind of give my regular thoughts on the space. I'm not 100% sure what we're going to be talking about next time yet. I have a couple of different ideas, and I'm trying to figure out what's going to be the best one. So just keep an eye out for that. And thank you, everyone. Really, that's all I got to say. Just thank you guys for joining me. I really hope you all have a wonderful weekend. I am going to be sticking around for a little while. So if you guys have any questions, or you just want to hang out, feel free to chill. But thank you guys for tuning in to this episode of the All Time High podcast, and I will see you all next time. Thank you for the biddies, boys. My 2 biggest fans. NFTs. Yeah, I do want to do an episode about NFTs.